We can currently see a lot of DXY currency strength inside Forex markets. This is causing financial markets to break down. We can see it across the S&P 500, the Nasdaq, the Dow, the Russell 2000. Different country indexes open at different times, but you can see there's a lot of negative momentum inside global markets right now. The major problem that the economies are facing globally is interest rates higher for longer. We can see currently the current US 10-year yield is spiking, and this is a fairly significant spike that we're witnessing. The levels and the video for the CTKS method monthly service have been just released for the US 10-year. It's very important to look at that video. The DXY is also showing structural strength. The structural levels for the DXY is now inside the CTKS method monthly service along with the three-dimensional risk management paths to the end of the month. One thing to be aware of, when the DXY spikes and the US 10-year spikes up, it's not good for stocks, and you can see it playing out on the futures on the S&P 500, the Nasdaq, the Russell and the Dow. You can also see that blue line. That blue line is Bitcoin. It's not good for Bitcoin either. When it comes to central bank balance sheet, the US is restrictive, as is Germany. Japan is expansive. Australia is restrictive. Canada is highly restrictive. New Zealand is loosening their policy, as is China. And the UK central bank balance sheet is restrictive as well. This is all about, restrictive policy is all about bringing the US interest rate down. But if it goes up too fast, too quickly, that creates stress on the banking system. The US government is also dealing with kicking the can down the road about the US government shutdown. If the US can't pay its bills, it's going to be paying higher interest rates, and it's going to be downgraded as well. Restrictive monetary policy is also occurring because the CPI has been so strong, but they're trying to bring it down. Even with the Canadian central bank balance sheet just decaying, literally so restrictive, you can see the CPI is starting to pick up. Crypto cannot escape the stock market's gravity, and recently Bitcoin structural lines have been released inside the CTKS method monthly service. We can see that Bitcoin came through a structural level at 27,827 and then came up to many structural levels and was rejected from them. It tried to find support back at that 27,829 level, but it failed. It did touch this lower support level, structural support level, at 27,360. Unfortunately, there are a few there as well. But if the DXY spikes and yields spike up, that spells bad news for every single market. It's possible that we may get some overflow if the banking system becomes destabilized into Bitcoin. Total crypto market cap has also been released into the method service, and we can see there was so much overhead resistance that it was highly probable that we would get a pullback. The unfortunate thing is, with yields and the DXY starting to spike, that's causing so much pressure on global markets. It's taking risk off the table, and we can see the total crypto market cap is suffering. Right now, we need to deal with managing losses. The first way to manage losses is philosophically. I'll take you through it. It's very important to know. Inside our community, we talk about managing lessons. What is a lesson? It's a lesson that we need to learn from, but it's an unexpected negative outcome, and we don't like those. Nobody likes a negative surprise. The typical way the majority of people respond to unexpected negative outcomes is blame something external. It could be the economy, rates, anything, but it's not them. The no responsibility victim mindset when it comes to unexpected negative outcomes is a disempowering one, and it has blame as the foundation. Blame is a destructive habit. It leads to anger and unhappiness and a self-poisoning. Anger grows into resentment, which causes weakness in the person. Resentment grows into hatred, which causes misery. Sometimes even revenge also comes from hatred. But the problem is, this doesn't fix the unexpected negative outcome from occurring again. That causes compounding losses or the doom cycle. The issue is, how we do one thing is how we do everything. If a person has an unexpected negative outcome in the financial markets, how they deal with that is how they deal with unexpected negative outcomes across their relationships, friendships, work, everything. Blame will create numerous doom cycles and numerous compounding losses. We are in control of our lives because we're in control of our choices, and you control your life through the choices that either strengthen or weaken you. Blame is simply a habit. When people learn the true costs of blame, they will avoid it like the plague. The true cost of blame inside financial markets, anything or anyone you blame won't stop the losses occurring next time. You'll simply move the target onto the latest acquisition. But the problem is, you won't stop the losses coming. Blame, hatred, revenge, all of those things don't stop losses. They magnify them. Instead, having positive, courage-based habits, that solves losses. That is a choice to strengthen your life. And making a small choice inside financial markets will have a ripple effect over your entire life. It will make your relationships better, your work environment better, your financials better, your friendships better. Unfortunately, in Zone 1 and Zone 2, this compounding loss doom cycle is the norm. It's very natural to blame inside Zone 1 and Zone 2. In fact, Zone 2 is called the blame zone. Sooner or later, that person figures out, or we figure out, that blaming others will not solve our problems. Blaming just causes compounding losses. Instead, we must learn. That means we look to the unexpected negative outcome and we own it. We say, how can I do this better so it doesn't happen the next time? A lot of people are brought up in very highly toxic environments. They are told that kindness is weakness. After all, if you're kind to yourself, you won't blame and you'll learn. That means that you will break out of the doom cycle, and all of your relationships, your work life, your financials, your friendships, everything will improve. It also puts you in control of your life. Learning requires self-kindness. Unexpected negative outcomes, when you really understand them, are not unexpected at all. They're normal. Therefore, you're kind to yourself and say, well, I don't need to externalize this. I just need to learn from it. Being kind to yourself opens your mind to look and ask deep questions. When people blame, they stop asking questions such as, how can I control this? They give all their power to the external source. Never disempower yourself. Self-forgiveness is very important as well. Unexpected negative outcomes are not to be taken personally. They happen to everybody. The more you progress in life, the more of these unexpected negative outcomes will occur. That is also to be expected. Blame is a negative habit. Ownership is a positive habit. Always remember, how we do one thing is how we do everything. If we can't cope with unexpected negative outcomes in the financial markets, we can't cope with them inside relationships, at work, inside friendships, just every facet of our life. We just can't cope. Therefore, it's important to use financial market lessons to your advantage. They can transform your life, but you have to own the loss. When you own the loss, you empower yourself, you gain strength. Your strength always follows setbacks. If you've had a massive setback, you're in for massive strength. But not if you go through the doom cycle. You're in for a massive problem. Because the losses will compound until you learn to take accountability. This is not what a lot of people want to hear, but I want to be very straight with people. When it comes to financial markets, if you can't take ownership of your losses, you will continue to make them. Always be learning from the loss. What lesson, what strength was contained inside the loss, and make a rule out of it. And when you've got that lesson, that losson, you'll be on to the next one. And increase strength. Financial markets demand a certain number of lessons before you can become consistently profitable. If you get stuck on the first lesson, that is, you made a loss or you made a big loss and you just can't get over it for whatever reason, you can't migrate yourself to the next lesson. That means consistent profitability will be withheld. Life will always hand us lessons, always hand us setbacks and disappointments, unexpected negative events. It's up to us how we choose to interact with that particular thing. Do we gain strength from it, or do we become weaker and more miserable? If you can relate to Zone 1 and Zone 2, the panic and the blame zone, don't worry at all about being there. Every single professional goes through Zone 1 and Zone 2. They just sure as hell don't want to stay there. They get to a point where they say, I have to make a change. I have to do things differently. I have to learn and take responsibility. It's a well-worn path. So when you look at a big setback, either in life or financially, just look at it as, wow, what a setup for the next life rally. All I need to do is gather strength through my learning. There is no setback without 2 steps forwards. And if you've had a big step backwards, the 2 steps forwards are going to be fantastic, but not if you're in the doom zone. If you've been caught in negative price action, the most important thing to realize is that there is a lesson tied up with the loss. And it also depends if you're trading or investing. If you're investing and you're buying like that and you believe in what you're doing the right thing. It's not an unexpected loss. It's a bargain. But it depends on so many things, such as your investing or trading horizon. As a community of traders, we're in and out of positions. If you're trading or investing, starting small and scaling is really important. It's vital that you know what you're doing. You'll need to stack probabilities. The only way to stack a probability is look at multiple charts and see how their structural levels intercorrelate and interconnect. To manage risk, and only you can manage your own risk, because only you knows your time horizon, how important the money is. If you're swing trading, just getting in and getting out of the market, or you're trading and investing for the long term. There's literally an infinite number of ways people do things. Therefore, you must know what you will do with your entire portfolio or any specific trade if the market goes against you, goes neutral, or goes up. Always remember, you control the trade or investment, but the market controls the return. Your return will always be based on your active learning, your knowledge, and your courage. The market always penalizes blame and gambling. Zone 1 and Zone 2 are terrible places to visit or even live. You don't want to be there any longer than you can possibly be there. Typically, people get out of there when they suffer mind-numbing losses. Every successful trader and investor goes through Zone 1 and Zone 2. They say when you're going through hell, the secret is keep going. The bridge between Zone 2 and Zone 3, which is literally the lose money rule zones and the make and keep money rule zones, is learning and getting out of that doom cycle. And diamondization, turning yourself into a diamond, that's all about the fact that you've suffered such incredible losses that they just don't burn you anymore. Every very successful trader and investor has gone through that process. If you're going through that right now, it does seem like hell on earth, but it will get better with learning. Just remember, get out of that doom cycle. It is not your friend. Always remember, you are who you are because of the tough times, not the easy ones. When an unexpected negative result pops up in your life, just say, fantastic, something to learn from. Change your mind to one of empowerment. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.